There is zero capital gains tax on physical gold in Thailand. Zero. Not a reduced rate, not a threshold. Zero. And yet the majority of Western expats living here have never bought a single piece. Not because they don't want exposure to gold, but because they walked into a Yaowarat shop once, saw a price board that made no sense, and walked straight back out. That is a genuine structural tax advantage over almost every country most of you came from. The UK charges 28% on gold gains above the annual exempt amount. Australia takes up to 23.5% after the 50% discount. The United States treats physical gold as a collectible, also 28%. Thailand charges nothing. This is not a loophole. It is explicit Thai tax law. The reason expats aren't using it is simpler than you'd think. Thai gold runs on its own rules, a different purity standard, a different unit of weight, a price set by a domestic industry body. And nobody explains any of it when you arrive. This video does. Here is the personal stakes version. If you're sitting on $100,000 in savings, earning interest in a foreign currency, exposed to exchange rate movement, and taxed on any gains when you eventually sell, and you have zero gold in your portfolio, you are carrying a concentration risk that your Thai neighbors solved decades ago. They didn't do it by reading investment reports, they did it by walking into a shop on Yaowarat and buying a quarter-baht piece the way you'd buy a coffee. Let's talk about what that actually means, because the first thing that confuses every Western buyer is the unit. In Thailand, the word baht does two jobs. It is the currency, and it is also a unit of weight for gold. 1 baht of gold weighs 15.244 grams. These are completely unrelated. The weight baht predates the currency baht by centuries. It comes from the same Siamese measurement system that traders used before modern banking existed. So when you walk into a gold shop and see a price per baht, that is a price per 15.2 grams of gold. The most common retail size is 1 baht. But shops also sell quarter baht pieces called salong, which weigh just under 4 grams. That quarter baht piece is the entry point for most Thai retail buyers. Genuinely affordable, liquid, and buyable the same afternoon you decide to sell. The second thing that confuses newcomers is purity. Thai gold is 96.5% pure, hallmarked 965. That is the national standard, set by the Thai Gold Traders Association, and every legitimate gold shop in the country uses it. This is not the international standard. A bar from the Perth Mint or an LBMA dealer runs at 99.5 to 99.99%. A Yaowarat bar and a London Good Delivery bar are different alloys. You cannot compare their gram prices directly without adjusting for purity. Most newcomers don't know that, and the ones who don't get confused about why the math never quite adds up. The practical implication, if you already hold international standard gold and you're thinking about adding Thai gold to a portfolio, you are not buying the same product. You are buying a complementary one, Thai domiciled, baht denominated, and priced against a domestic benchmark that behaves somewhat independently of the London spot price. That domestic benchmark is the TGTA daily price, updated multiple times a day, published publicly, and applied uniformly across all member shops. This is what makes Thai gold shops unusually transparent by retail standards. You are not negotiating against a dealer's proprietary spread. You are buying from a nationally posted price with a known standardized margin on top. Which brings us to the most important number in this market, the spread. On a plain gold bar, called thong kam, the buy-sell spread at a Yaowarat shop runs approximately 200 to 300 baht per baht weight. On a 1 baht bar, that means you need roughly a 0.4 to 0.6% price move just to break even on the trade. That is a tight, liquid market by physical gold retail standards anywhere in the world. Gold jewelry, I called thong rup phone, is a completely different story. The spread on jewelry runs 500 to 1,500 baht per baht weight, or more, because you are also paying workmanship fees that the shop will not buy back. If you walk into Yaowarat thinking you are making an investment and you walk out with a necklace, you have paid for art, not an asset. You need a significantly larger price move just to recover your entry cost. Buy bars if your goal is investment. Buy jewelry if your goal is jewelry. These are not the same trade. Here is the mechanism that makes this market work so well for retail holders. TGTA member shops, and there are thousands of them across Thailand, will buy back your gold the same day you bought it, at the current posted price minus the spread. There is no appointment. There is no delay. You walk in with a bar, they check the hallmark, they weigh it, they pay you. For a foreigner used to selling gold ETFs through a brokerage or mailing coins to a dealer and waiting 10 days for a wire, this level of physical liquidity is unusual. It is one of the structural reasons Thai households treat gold as a savings account rather than a speculative position. Now, the part of this market that most long-term expats have still not noticed. YLG, one of Thailand's largest gold dealers, runs a digital gold platform called YLG Get Gold. You can buy allocated physical gold for as little as 100 baht. That is under $3. No shop visit, no minimum denomination problem. Instant buy and sell through a mobile interface. The gold is allocated, meaning it is your gold, not a promise to pay, and it tracks the domestic TGTA price. For an expat who wants baht-denominated gold exposure but does not want to manage physical bars in a condo safe, this is a genuinely practical solution. For those who want to go further up the sophistication curve, TFEX, the Thailand Futures Exchange, offers Gold D futures contracts. The standard contract is 10 troy ounces. More recently, they launched mini-gold online futures at 1 troy ounce, approximately 2 baht weight, which dramatically lowers the margin requirement for retail participants. These are exchange-traded, regulated instruments. They are not for everyone, but they exist, and knowing they exist is part of understanding the full stack. So what does this mean for you practically in 2026? If you are an expat earning foreign income, holding savings in a foreign currency, and thinking about portfolio construction, Thai Gold solves several problems at once. It is baht-denominated, so it hedges against baht appreciation, eating into your purchasing power. It carries zero capital gains tax. It is liquid at the retail level in a way that physical gold almost nowhere else in the world can match. And it starts at 100 baht on your phone. The practical steps are these. If you're buying physical gold, buy bars, not jewelry. Check the TGTA posted price before you walk in. Understand that the spread is your transaction cost, the same way brokerage commission is a transaction cost. It is not negotiable, and it is not a rip-off. It is the price of access to a liquid, nationally benchmarked, tax-free physical asset. If you want digital exposure first, download the YLG Get Gold app, buy 100 baht worth, and see how the system works before you commit more. If you're already holding gold in a foreign account and paying capital gains tax on the gains, worth running the numbers on what a Thai domiciled position would cost you in total versus what you're currently paying. One thing to remember, the number is 96.5. That is the purity standard that defines every legitimate gold product in this market. Once you understand that number and understand that the baht weight is a unit of mass, not a currency amount, the rest of the system falls into place quickly. The tax advantage is real, the liquidity is real, and the barrier to entry once you know what you are looking at is lower than almost anywhere else in the developed world. For deeper analysis on gold's role in an expat portfolio, how to report gold holdings under Thailand's tax framework, and what the new TFEX mini-contracts mean for retail investors, subscribe to the Bangkok Brief newsletter at thebangkokbrief.com and subscribe to this channel so you get the next one.